Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on Tuesday, February 10th. And today we are going to take a look at how silver is leaving the Comex. We're now at the point where you could say a lot of silver has left the Comex. Still a lot in there, and we will dig into that, as well as how now even the U.S. Secretary of State is on board with the de-dollarization. Well, I wouldn't say he's on board with the de-dollarization movement, but on board with acknowledging that it is happening now. It is no longer just gold and silver YouTube channels or blogs talking about it, but you get it from Secretary of State. So I'd like to think we were right on that one, quite a bit in advance. More to come on the unit at some point in the future as well. But anyway, let us take a quick look into the pricing today, where you can see it's what I guess you would call a nothing day, almost flat in the gold and silver markets. Interesting. If gold were down $30 10 years ago, we would have been making a ruckus. And silver down $2, although after everything we've seen the past couple of months, feels like a day you can kind of catch your breath a little bit. So, of note, we can see here our silver spread between New York on that line with the March futures and London, the XAG USD spot. Still in backwardation. Today we have 29 cents. Has been wider, has at times normalized briefly, but staying in backwardation. And that has most likely helped facilitate some of the metal that has left the Comex and headed to London and other places, which we will dig into. But anyway, if we let's take a 1 month look at the silver chart. Obviously, we're back over 121 about a week and a half ago. Then you had the big Friday sell-off. Then the additional sell-off following that week, we got down to 61.90 was the low that I saw. As you can see up here, 121.78 was the high, and rebounded since then, which, gee, I mean, I know it did go up there and has come back down, although when you think in the grand scheme of things that silver went to $120, then came back down to 60 and is back up to 80. I don't know if stabilization is the right word to use to describe that, but certainly different than what we saw. Well, even in 2011, there was, what people forget is there was a rebound throughout the summer and silver stayed in the 40s. But in either case, we're seeing some strength there. And similar with the gold price, now this is interesting. I mean, gold got hammered on that sell-off too. And if we look back at the 1 month chart, we can see 44.23. So $600 lower, and here it is at 50.48. The futures with the all-time high 51.0191, so only $63-ish away. So you just had the biggest sell-off in the history of precious metals by dollar amount, let's say. Silver by, I think that would be by dollar and percentage amount there. And despite that, gold back over $5,000, $60 away from the all-time high, and a host of factors that I try to be careful on how I phrase this, but it gets, as I watch what's happening, it gets harder by the day to see the scenario in which 10 years from now the gold price is lower than it is today. Obviously, mysterious things happen in finance. I know back in 2011 we may have been saying the same thing, although I will at least lay out why I'm saying that. And you can take a look for yourself. Real quick, something else I'd like to show you is the cocoa chart, which we've looked at before. Here you can see it was trading around $2,500 a contract, give or take. Maybe a little bit less, sometimes a little bit more. But for the better part of, if you call that a somewhat straight line for 50 years, then they run into a shortage. Price spikes, got up over 12,000. There you see a high of 12,931. And it's interesting. So basically, it went from about 2,500 to 12,500. Has since come back down. If you drop the zeros, that's going from 25-ish to 125. So if you're a long-time viewer of the channel, you may have heard me say at times in the past couple of years where what happens if we do hit a supply gap At least cocoa might be some preview of what we saw there, and interesting just to see the similarities in the percentage returns. So not sure that we'll be going back down to $37. I think we got a reminder that prices can go back down. And just keep in mind that even when you see the price going up back in 2008, we had silver go from $21 down to $9 when a couple days after the Bear Stearns JP Morgan deal. And that was even as there was a physical shortage, especially on the retail level. So just remember that there's what happens in the long term and deviations in the short term. Although, one last note before we dig into the Comex. Here we have, it was a little higher this morning. It was about $81, $82 around the time when China closed. Yet I had China at a 90.58 close. India at 85.68, so still a premium. India has come back in a bit, but still a premium there, which we will keep an eye on. And one of the ways that that premium has helped get to been resolved, I would imagine, is connected to this. Here we see the Comex stockpile, and you had a peak of 531.8 million ounces on October 7th. Obviously, that was 1 week before everything started unraveling. I don't know if I said October 7th or 2nd, but that was October 2nd when you had the 531.8. Then on October 8th, 9th, that's when India hits a shortage. London has their teeth kicked in as well. And that's right when we start seeing metal leave the Comex. You can see that in the beginning of January, it accelerated. And as I wrote on our Substack back in January, I kept wondering where there's a $8 to $10 premium in China, which got higher at times. The Indian premium shot up as well. It's like, gee, at some point, did they come and take delivery from the Comex? At the same time, when you see nations around the world launching strategic stockpiles of critical minerals, which does include silver, and then you hear the commentary from the Trump administration, you would think, gee, I would not think they would sit there and let the Comex get drained. And maybe someone will step in at some point, but you can see here it's accelerated for the first 5.5 weeks, 6 weeks of 2026. Now, to be fair and put this in proper context, we're here. And aside from this huge amount that came in last year as the markets were awaiting the tariff policy on the metals, we would be, in fact, I'll take even farther back. Here's the history. We're down here just under 400 at 397 or 390.47. So just under here, which I guess now we've dropped below the 2021 peak. That was metal started coming out of there following the silver squeeze 5 years ago. Man, it's already 5 years. So we've dropped below that, but still historically a large amount of silver. So when I see the Comex is getting drained, it's like on one hand, there's some degree to which that's happening. I mean, we've had since October, so that's, what do you call that? 4.5 months, let's say, almost 5 months. We've seen 140 million ounces come out, so that's a lot. And it's not just that it's coming out, but if you recall, we reported back on November 10th that China was experiencing supply issues again. That was about a month before their premium surged. And let's take a look. I think I got that pulled up here. They did not have there we go. And here are China's inventories, which you can see also peak in 2021, now down to just 800 tons. So it has fallen again. To put that in context, that's just 25.7 million ounces. And to put that in context, when London officially had their problem on October 9th, I think their free float, basically what's underpinning their spot market. So if you strip out what's held for the ETFs, they were in the danger zone because their daily turnover is about 250 million ounces, and their free float got down to, I think it was 141 was the lowest that I saw it. And here in the industrial center in China, you have about a sixth of that. at 25.7 million ounces. Doesn't seem like a lot. And what are they going to do? Take metal from London? I would imagine to some degree, when you think, where is this metal going? I think some of it went to London. I would imagine whether directly or indirectly, some of it is going to India, where we've seen reports that their demand has even surged beyond the levels that sent them into a shortage a couple months ago. Some of it, I'm sure, is going into some of those strategic stockpiles that both China and U.S. have announced. So it's going to be fascinating. I was wondering if we were kind of leveling off here, which to some degree, we were, and then everything got crazy with the price and a whole bunch of other things. And I will stand by what I was saying over a couple of weeks ago about I think we already passed a point where there was a supply issue in China, which is why not only did the price globally get bid up, but then the premiums in the Far East on top of the New York and London prices. So anyway, we're down to 390 and 10 million ounces over the last 3 days alone. So a lot of metal is coming out of there. Again, would I say that we are on the verge of running out? No. And I know I see a lot of commentary about how the March cycle, people are looking at the amount of silver standing in the open interest versus what is in registered or eligible. And be aware that the metal can be transferred between registered and eligible very easily. And one of the main reasons why a lot of it is put into eligible rather than being left in registered is because you have lower storage costs when it is in eligible. The teal green part as underneath the Christmas tree green part. So yes, registered is what is immediately available for delivery. That can change. And either case, though, I think it was up to 400 million ounces in terms of the open interest, which, yes, on one hand, that would be more than certainly registered and more than the total at 390. But really, as we've seen, except for one occasion in 1980, keep in mind the majority of those contracts are rolled over. So that number is going to be a lot lower. I also keep an eye on, it's one thing if metal leaves the Comex, but a lot of the time you have high delivery numbers, but it just shifts to a different account. So kind of hard to know when does it, or I don't know, it could be that maybe the just the registered in there, and even some of that, just because it's in registered, someone could shift it into eligible. We really don't know how close we are to the point where someone is not willing to sell their metal. So we shall see. And anyway, that is what's going on in the Comex. Even if any metal is left from the Comex to China, they are still gobbling that up. Here we can see the ETF flows. We've had a couple big spikes. These is the silver that goes into the ETFs like SLV and others. And when you see these numbers here, anything over 10 is pretty big. And to show that in context, I mean, here is the 20 years, basically since when the trust began in 2006. And in turn, oh, here's the 20 mark. So we see 1, 2, 3, 4. There were 2 there, 5. And then we've had 1, 2, 3, 4 above 20 million ounces in just the last 2 years alone, and also 3 times above 20 million since October, with another one slightly above 16. So I know the Silver Institute put out their numbers today, and they had a smaller headline deficit, although keep in mind that when you add what's gone into the ETFs, we actually just saw a record last year, and while it's leveled off a bit let's take a closer look at that, because you can see here we're about flat since mid to late December, down a little bit. And what's interesting though is that we saw metal leaving the ETFs while the price was still rising, and then as the price went down, much like on the retail level and much like we saw in some other places, another large addition there. I heard there was something funky with SLV that happened, but anyway, if metal keeps going into the Comex, remember that when you see the headline number from the Silver Institute, that's not yet including the ETFs. You got to look in the bottom field, and at least last year when the ETFs were included, then you had a record. Again, metal can come out of the ETFs, but anyway, another interesting one to look at before we get to the comments from Marco Rubio. Here is the swap dealer, aka the bank's short position, and an interesting picture here. And one thing, I've tried to mention this enough times that people could hear it, and also in the column. I certainly used to track the short position by the banks a lot more closely, and I still keep a close eye on it, although in terms of whether that is a naked short or not, I don't know, maybe some way midway through last year. I've talked with someone who used to run one of these precious metals desks that I know a bit well at this point, and he's mentioned that when people see the Comex position or the bank position on the Comex, they're taking it out of context because, well, you can see in this line shows how short the banks are. Further down, the more short they are. He said that those are applied when the offtake agreements from the miners are made, so that there is rarely a directional position. I don't think the guy is bullshitting me, because it may be not 100% all the way there, although at least to the degree that he's worked in that position, I have not. So I have a little bit of a mixed view, yet what is interesting, all that aside, is that there has been an interesting correlation. We won't zoom in on it today, but kind of a little harder to see after the price spike. But there was often a pretty high correlation that when the banks, here they actually got long, and that usually preceded a rally, and vice versa. Either case, we've had the opposite, because here back in, let's see, that would have been, about mid-year last year, I think in July, bank set a record for largest Comex short position. Again, what's offsetting that? I'll let you decide which variables to choose there, but at least here, that was the shortest they've ever been, and you can see the price soared since then with the banks reducing that position. I guess another way you could look at it, which maybe is more causative, is what the funds or speculators are doing on the other side of that, because essentially, imagine if you have no contracts in the market, customer comes in and wants to buy, who does he buy it from? The banks. Now, in terms of whatever the heck happened a couple weeks ago when the price fell over $30 in a day, that sure reminded me a lot of what I heard Bart Chilton talk about in the interview I did with him a couple years back. He described it as spoofing. So, I mean, I guess there's some nuances here. I hope that was clear. I don't know if it's as cut and dry as I used to think or others might think, but hopefully that at least passed along the relevant information so you can decide for yourself. And then with that said, let us get to this one, because Vince Lancey, who does our morning show, was on top of this early. And in case you did not see it, here is U.S. Secretary of State Marco Rubio.
Today, Brazil, in our hemisphere, largest country in the Western Hemisphere south of us, cut a trade deal with China. They're going to, from now on, do trade in their own currencies, get right around the dollar. They're creating a secondary economy in the world, totally independent of the United States. We won't have to talk about sanctions in 5 years, because there'll be so many countries transacting in currencies other than the dollar that we won't have the ability to sanction them.
There's going to be so many countries transacting in currencies other than the dollar that we won't even be able to sanction them. It sounds like a lot of countries that would theoretically be included in that bucket. The sanction thing, I don't think it worked out too well on Russia. That sparked the whole gold buying frenzy. It's been a while since I looked at it, but I think it was like literally the month after the sanctions is when that started. So, in case you're wondering, you can check it out. I'm pretty sure you will find that. But here's the other thing. If we can go back, cut a trade deal from there. They're going to do trade in their own currencies to get right around the dollar. They're creating a secondary economy in the world. Totally independent of the United States. And just, if I may, I don't know if this is, hopefully I'm not soapboxing, but I don't know. I had other people writing, oh, these guys talking about de-dollarization, they're just doing this or that. Well, I wasn't doing that for any other reason other than you could see it happening. And now here we are, Marco Rubio saying the same. And I know I'm like talking and we're going through this quickly. I think this might be one of those things that 10 or 20 years from now, when you look back at some of the mileposts and you're like, well, when did this really start happening? I mean, I would say it started happening a long time ago, but that's certainly eye-opening. This isn't Uncle Ned's garage blog. I mean, the guy's in the cabinet. So now you are hearing it from him. Speaking of exciting moments from Trump administration officials, here is Donald Trump himself. Because I know, everybody was worried. Kevin Warsh, the hawk, he's coming in. Sell my shit. Somebody take my silver. $10 under spot bullion to a local coin shop. Take it. Gotta get rid of it. Warsh is coming. No. What are we gonna Nibbles? What are we gonna do? Warsh is coming. He's gonna hike rates like Volcker. My dog Nibbles is incredibly concerned about that. Although, good news, in case actually Nibbles wasn't concerned, and I'm guessing you weren't either. And just in case you were, though, let us hear what NBC News heard from the president himself.
Let's get to the Fed. Is there any doubt in your mind that interest rates are going to be lowered?
Not much.
Why? How can you say that?
I just think they're going to be lowered. I mean, they should.
Is your new Fed pick on board with that?
We're way high. Okay, we're way high in interest. We have now, with me and with all the money, I've always been good at money. And with all the money coming into our country, we're a rich country.
I guess except when those casinos went bankrupt, but other than that.
Again, we have debt, but we also have growth. And the growth will soon make the debt look very small. Because it's the greatest way, you have two ways. You can cut, and we do that anyway, and we did that.
I kind of remember Elon Musk saying that they didn't do that, but...
You know, we got rid of...
He also did say we have a little debt.
Hundreds of thousands of federal workers. Yeah. And those workers went out and got themselves jobs in the free enterprise system. And you know what? That's called making America great again. We had 10 workers in the federal government for every single job. When the Democrats go in, they hire. I could right now give you the best employment numbers in history. You know what I do? Go out and hire 2 million people, put them in the federal government.
Does your new Fed pick...
I do the opposite.
Yeah. Does your new Fed pick understand that you want him to lower interest rates?
Oh, I think he does, but I think he wants to anyway. I mean, if he came in and said, I want to raise them,
if he said that, he wouldn't have gotten the job.
He would not have gotten the job, no.
Well, there you have it. A, you don't have to convince the guy he wanted lower rates anyway. And B, if he didn't feel that way or wasn't going to play ball, then he wouldn't have been picked, which I might say that we have been saying and writing for the past couple of months. Certainly since the specter of Warsh Fed crashing the debasement trade was thrust upon the American people as silver was down $30 that day, and looks like that turned out to be complete bullshit because top of it, how low does Trump think they should go? There he is calling for 1% rates. And or no, correction. Excuse my sloppy language. 1% and maybe lower than that. We'll see. I wonder what are the odds on Trump calling for negative interest rates before he's done in 2028. And now you see that the guy he picked, as even that rock that I stepped on outside was able to ascertain months ago, he was going to come in and follow Trump's interest rate policy. Now you find out he would not have gotten the job. But it gets even better, if I may be as bold as to say so. Because, you know, like if you go back, I know if you're 2 weeks ago, $80 silver is not that impressive. $5,000 gold was still, you're like, oh, that's intriguing. So, I mean, now if you go back farther than, but if you go back farther than that, when we had $30 silver, remember when the reciprocal tariffs were announced? I think that was April 2nd. Silver went from 35 to under 29 or 28, somewhere around there. So if you consider where we have come from, don't make me pull up the chart again. I'll do it. All right, fine. You're going to take that attitude. Look at the darn gold chart. If you own gold, you got to be happy. Especially if you own gold prior to 2024. So, with that said, we have $5,000 gold, $80 silver, a president who just he wouldn't have picked the guy he just sent to the Fed unless he had promised to lower interest rates. We don't know if there was if he signed in blood to get 1% or lower. But despite that, if you look at today's Fed futures chart, even despite Trump's proclamation, what do we have? Well, we're here at 350 to 375. So even out to the end of December of 2027, almost 2 full years away, market's still only pricing in 2 25 basis point rate cuts. And when Trump says 1% or lower, that's 1.75%. The chart can't fit where Trump thinks rates should be. And unless, now I know there's some senators, congressmen who've said, well, we're going to block Trump's guy because of the lawsuit against Powell. So if you want to say there's some, I doubt that will happen. I mean, I guess I wouldn't say it's a 0 probability, but aside from that, this is mind-boggling to me. And in fact, if anybody is upset about the sell-off in silver over the past couple of weeks, then here is your consolation, refresher, rejuvenation, because it's one thing if the markets it's like things get priced in. If they were pricing in rates down to 1%, you'd be like, okay, well, I guess we're going to get rates down there. And when it happens, it's already been priced in. But they're off. There's a 200... conceivably 200 plus basis point gap between where not only where rates are, that would be 250 basis points plus, but between where the markets expect it and where Trump, I mean, they're basically saying they see no chance, 0%, 0.3% of getting down to 175. So we'll see how that goes. Yet, what happens to gold and silver if June, July, we're sitting here and basically Warsh is in, or someone who's going to do the same thing as Warsh? I would imagine we would keep going until he gets someone, or maybe drops the lawsuit against Powell. But unless that somehow gets derailed, I mean, he's continuing to say he's going to get rates lower, and how low does he think they should go? 1% or lower. And I mean, you saw what was happening in December when people were fighting over a 25 basis point rate cut. I mean, if we're, already a couple cuts in and it's like, well, I think 1% is about a neutral rate. If he comes out and says that, I mean, how does that affect this? Let alone everything else that is going on, especially in silver, which also, in one last note, includes that sounds like complete chaos in China in the silver market. Seen their exchange looking into some traders. It seems like things got pretty wild. Funds were not matching their net asset value and all sorts of mania, which... Here's the thing. Is it unnerving when you wake up and you see silver down $30? Well, if you own a lot of silver and it's a big part of your portfolio, then it might be, or it could be. Although I know I had some guy leave a comment on the Substack. He said this was me covering my ass. I would dispute that, but if you're thinking about what do I think is going to happen 10 or 20 years from now, depending on what you're doing, where... Did I sell any physical silver? No, I did not actually sell. I didn't sell anything at the peak. I was actually buying some gold mining stocks, which leave a comment if you'd like to know why I did that in particular, and I'll keep going for a few extra moments here. But, I mean, with my physical gold and silver, now I'm not like some of you out there that, you guys need your own international vaulting system. So, I mean, I'm still Still just happy-go-lucky guitar player here, but I mean, the amount that I have, I guess you would put in the bucket of like one day when interest rates get to 1% or when the debt is ever addressed. I hope to have sitting there. So was not looking to offload that. I also can completely understand what Rick Rule was saying, where it's his speculation. He's looking at gold as his long-term money savings. So when he bought silver for 20 or 25 bucks and it gets up to 90 or 100, I do think people often lose track of the role that the level plays in there. Because at 100, okay, could the market pop and you go to 200? Sure, that's a double, but that still wouldn't have been as impactful as what you got if you went from 20 to 100 or 25 to 100. So there you go on that one. And seems like a mess in China. And I'm checking in the chat to see if anyone wanted to see the gold stock story. All right. Well, so far nobody does. Well, you got a couple seconds left, and maybe I'll tell it if someone asks. You will be the richest guitar player ever. Cello lessons teacher. Oh, wow. We got a cello teacher in here. Cool. And he's saying I'm going to be the richest guitar player ever. Even better. So, yeah. Well, maybe I'll be able to afford to have a cello on a song. That could be fun. And anyway, if anyone has a quick question, I'll take one or two. Somebody wants to see it. But I think that covers all of our stories today. I might add that we do have the Arcadia Economics Gold and Silver Daily Substack, which you can actually find, if you can believe this, at goldandsilverdaily.substack.com. Here today we had a write-up of Marco and a lot of things that don't quite make it into the show, and this is daily as well. I was thinking we may do a live Q&A through this soon, where if you're signed up to the Substack, maybe we get a Zoom room and go through these things, take some questions, allow some people to meet each other, and all sorts of good stuff. So let's see this gold stock. Okay, well, it wasn't the gold stock. It's a quick story. I don't even know if it's a story, but a note that I will pass along here. In that when I look at what's happening to gold, and to be clear, this is not in any way financial advice or what you or anyone should do. I'm just sharing what I have done and the thought process I've looked at it with. I don't know, maybe 5 years from now you'll be giggling at me, but maybe not. And here's the thing, because again, there are people far more qualified to do valuations on the average gold price stock level, although I've heard several people, and as well as discussed it with others, that Rick Rule was mentioning that the gold stocks at current level with $5,000 gold are about half the price what they were adjusted when gold was $2,500. So again, that's what Rick and some other people have said. That's certainly something before you go out and do anything. You want to do your own homework and research. Yet, let's just, to keep it concise here, if you accept that the gold stocks are undervalued at $5,000 gold, and you look at what's happening, where, here's the other thing, back to Rubio. All right, well, if they're that worried that 5 years from now so many countries will have left the dollar system that they can't even effectively sanction anyone in the world, as these countries are leaving the dollar system, what could they conceivably put some of that money into if they say, like, all right, here's the dollars, take them back. So you have that. And I'll bet a lot of that money goes into gold. We've already seen the money going into gold. Once the U.S. Treasury bondholders realize that there is not a miracle coming outside of a gold revaluation there's not a miracle coming for the bond market. What happens when they start to leave and go into gold? So, again, I don't like to talk about sure things in the financial markets yet. All the different things going on. I do think there's at least some legitimate possibility that we do wake up and at some point they revalue it higher to pay down some of the debt. I can't guarantee that. I guess we'll know one day if it happens, but I do think that's conceivable at this point. And we'll have Michael McNair back on in 2 weeks to talk more about that. But here's the thing. If the gold stocks, again, that's a big if, you got to confirm for yourself, but if they were undervalued at about 5,000, I mean, some of these companies, and I don't think the market has factored that in yet, once they start reporting earnings, you know, it's fun for us to sit here, gold's up $100. It was 4,700 2 weeks ago. Yet, I mean, now there's companies that are out there selling their gold at these prices, which, I mean, I think there's a good case to be made that the gold stocks will go up even if gold stays here. But when it's like, man, what happens if a year or two from now it is 7,000 or 8,000? Or what if it does something gets unruly and it goes higher? So anyway, on the sell-off, probably a little bit before the sell-off, but somewhat after the sell-off, that was why I was buying some gold stocks. I did get some silver too, which actually aren't down as much as you might think given the move in the spot price. I do think silver is going to continue its role being a lot more volatile and different profile at this point than gold. Similarities, yet different. So anyway, I could end up being wrong on that bet, but just when I see the things that are facing this situation, plus maybe we could make a list all day, but add in that the effort to reshore, which has now been brought to a head. Because now when the military can't get what it needs to do what it needs to do, now it's like, all right, well, they have to change something, which is reshoring, which means that a lot of things are going to be going up in price, including gold via that inflation. So, and, you know, this is just me, but at least as opposed to the way I used to do this and wake up, you know, gold and silver's down, be like, screaming and swearing. I find just taking that look of 10 years from now, is it possible that gold's back at 3,000? I don't think so, but hopefully this at least gives you some thoughts to keep in mind as you make your own decisions. And anyway, in case you need a little more, head on over to goldandsilverdaily.substack.com. Link is also in the description field below, so you do not even have to wear out your fingers with unnecessary typing. And with that said, going to wrap up for today. Hope your week is off to a great start. We're already getting halfway through it, and I'm sure tomorrow will be another fun day. I will be back at 1:30 p.m. live, talking silver and copper and some of the amazing things that have happened there as they are now materially strategic. Vince Lancy at 9 a.m., so go out there, have a great night. Thanks for tuning in as always. Hit the share button or leave a comment on your